And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. As always, the show where we bring you where the action is in the broader markets and what an actionable week we had last week. We are going to get into that. I'm going to share with you where the broader markets closed, what drove price action, and what we need to be on the lookout for in these markets going forward. So let's go ahead and start with some of that news last week. It did start with housing related data. New home sales jumped in March despite those higher interest rates. And that was certainly good news for housing stocks. We did see a couple of housing construction companies report strong earnings as well. We also did get Q1 GDP numbers, and they came in very light, certainly relative to Q4 of last year, 1.6%. However, we did see continued price pressures, and that was earlier in the week. It did spark inflation fears. And as the week moved on, we did see, so certainly today, core PCE data came in. The number was up 2.8%, but not as bad as anticipated. Net, the markets are pushing out not only the possibility of an interest rate cut, there is now anticipation, or certainly when you look at some of these investor sentiment, thinking that we may not see a rate cut this year. So certainly worth noting. We're going to take a look at some of the impact with that. And then also mega cap earnings reports. Those were certainly the biggest and most impactful, with Meta dropping pretty dramatically. And then on the flip side, we had Alphabet gapping up. So lots of action taking place there. We're going to take a look at those Magnificent Seven names to see where they settled. We have two more big names next week, Apple and Amazon, due to report their earnings. So let's go ahead and take a look at where we close for the week with those markets. And here we are. This is a daily price chart of the S&P 500, nicely marked up. This is from my last Sunday MEM Edge report, which comes out twice a week. And in this case, talking about the S&P 500, where it is relative to these key metrics. First up here is that RSI, relative strength indicator. We want to get that into positive territory. It's heading in the right direction. However, we are not there yet. Also taking a look at key areas of potential support and resistance. I had highlighted this 100-day simple moving average as a key area of potential support. And from there, we have since been trending mostly higher. Now, that 50-day simple moving average is one of the most impactful. It's the most widely watched, certainly among investors, institutions, and that is going to be this red line. That break below that 50-day simple moving average was quite negative for the markets. At this point in time, we did see a nice 2.9% rally in the markets last week, but not quite enough to get this index back up above that key area of upside resistance. Now, we do have this RSI, as I stated, trending upward, not quite positive yet. Let's take a look at the MACD, moving average, convergence, divergence, and you can see that we are also trending higher, not in positive territory. So in other words, we are not quite out of the woods yet. Those that are subscribers to my MEM Edge report will know all about the precedent period that we are using and the fact that we've had these head fakes in the past where the markets reverse, and oftentimes it won't follow through, but we are certainly on the lookout for that. I'm going to share with you breadth and other characteristics that I feel need to be very close as far as being on the lookout for a rally and a turnaround similar to this November into April period. So from here, let's go ahead and take a look at the Nasdaq Composite. It was up 4.4% this week, and all about, again, those mega cap names. We'll look at some of the other drivers in that Nasdaq as well. If we take a look at that RSI, we are just dipping into positive territory. MACD not quite ready for prime time yet, but that RSI is going to be from my work, the more key driver or indicator. And if we take a look at where we closed for the week, you can see that we are just below this 21-day simple moving average, but more importantly, we are below that 50-day simple moving average. So we've had a very, very interesting, very somewhat compelling, but from my work, not ready yet to jump in with both feet. From here, let's take a look at breadth. And this is an indicator that is going to be quite helpful as far as in telling you, is it just these key mega cap names that are driving the markets, or are we seeing names beneath the surface that are also faring well in the Nasdaq? So quite simply, this is a view of the Nasdaq, the percent of stocks that are above that key 50-day simple moving average. So let's take a look at the characteristics that brought us to where we are now. This, again, is the Nasdaq, and we had very, very low breadth, just not a lot by way of activity from this February into April in those Nasdaq 100 names. We did have that fall down with that strong inflation print in the beginning of April. And here we are reversing with this expansion or breadth continuing to move higher. But from my work, we're just not ready yet. We are coming out of an oversold position. I was anticipating a bounce going into this week, but it is something I will continue to keep an eye on. You always want to have an area and period of precedence as your guide. This is that sharp November downtrend reversal, and take a look at those characteristics. From here, we can take a look further at that Nasdaq, and quite simply, this is a view, and you can do this very easily with Stockcharts.com, where you can list those Nasdaq 100 members. You can also have a report sent to you daily or weekly. I do have that weekly report. I want to see what moved over the prior week when putting together my weekly report. But let's take a look. This is quite simply a view of daily percent change. And we're looking at the stocks that pushed that Nasdaq up over 2% today. So when reviewing this list, certainly Alphabet up here front and center, those strong numbers, the fact that they are now going to be providing a dividend, and lots of other factors pushing Alphabet up. 10.2%. Nvidia always in the mix when we're talking about AI. They also rallied on Meta's numbers and the fact that these companies are going to be investing quite a bit more in AI, which in turn means a need for Nvidia's chips and other products. But as we drill down a little bit further, let's take a look at some of these other top performers today. First up here is JD. This is a China-facing utility stock. We don't need to go a whole lot further for another. This is a Uruguay-based company, also in, I believe, consumer discretionary. And then some of these other names that also were top performers today, you will see a lot that are earnings related, BIIB. But if we take a look at this chart, you'll see that we had this nice gap up, but it is not ready for prime time yet. Very oversold, coming out of an oversold position. So from my work, really the point that I'm trying to make here is that we are seeing movement, certainly a nice big rally today. But if you drill down and take a look at those components that outperformed, and that's going to take us down to about this level, you will see, again, a couple of foreign names, and then other names such as Lam Research, which I've had on my MEM Edge suggested holdings list in the past, but it is not ready prime time here. We're not back above that 50-day. So that's one other metric that can, again, very easily, you can get your arms around what is moving or not. And also from here, let's go ahead and take a look beneath the S&P 500. And this is a 2-month daily price chart view of those sectors in the S&P. And I've added that RSI relative strength indicator. So up here in this upper left quartile are your relatively stronger sectors at this point in time. And then down in this lower right quarter are your weekly. So let's take a look at the top performing industry group this week. And that's going to be technology up 4.2%. Of course, we have very good reason and understanding as to why Nvidia certainly was up 15%, but let's go ahead and take a look at this 4.2% move, and you'll see that, again, we are coming out of a bit of an oversold position, and tech, despite its sharp rally, is still looking negative. Now, as we move through, you want to also be aware of these areas up here at the forefront. And interestingly, we do have staples having another pretty good week. Utilities also up here, these generally are going to be more defensive areas. And as we move through and take a look at some of these others, I do want to point out XLY. This was the second top performing sector, up 3.7%, also coming out of that oversold position. But there are some interesting names. I'll share with you a couple of downtrend reversal names in here. XRT, we'll take a look at that retail ETF and elsewhere, but certainly staying on the top of my radar because this sector has been languishing down in this lower quartile, and we're beginning to see a progression. And that's going to be really quite helpful in spotting potential rotation. So beyond these sectors, I have select ETFs that are really useful, again, to just fine-tune what is taking place beneath the surface of these broader market indexes. And again, that 2-month view, relative strength, and up here at the forefront remains the yield on that 10-year treasury. Now, we didn't see a big jump this week. We are hovering here at about this 4.67 level. However, certainly relative to historical precedent, if we go back to this pullback period back here, August into November, you'll see that we are quite elevated. Good to see, however, that it is remaining somewhat flat, but we are certainly keeping a close eye on that. Let's take a look at semiconductors. This group was up 9.5%. But again, it's another area that was not deeply, but a bit oversold, having this nice V-shaped sharp recovery, but we're not quite out of the woods yet. We did see nice volume, and within the semiconductor grouping, only 30% of the stocks are above their key 50-day simple moving average, so it's not quite broad enough. Certainly, two of the names that rallied today had quite a bit in the way of short coverage, individuals that were shorting those names. Now, let's take a look. I talked about looking at XRT. This is the retail ETF. And I'm highlighting this because upon this November reversal, it had a very nice move. It did not participate in the beginning of this year, but we did see a nice run up going into April. Retail stocks are the last to report their earnings. So we are in the very beginning stages of earnings season, but it is an area where I am building out my watch list, because when these names do begin to report, we could easily, depending of course on results, see nice returns in that area. Talked about housing stocks faring well. However, they are still not in positive territory. We're getting close, but this is another area where it's not every name participating. Similar to semiconductors, you do need to do your work and be selective as far as if you are interested in participating in the potential rally. And then down here in this area are the relatively weaker areas. We do still see healthcare. This is medical products, although one of the names from my MEM Edge report was up 8% this week. I only have a handful of names still on that list due to nice earnings. But let's take a look at Biotech, simply because this group can be a proxy for investor sentiment. So in other words, we go back to this nice sharp November rally. The move into biotechs is going to simply tell us that investor sentiment and confidence in the markets has been resumed, because this is a riskier area. We are not quite there yet. Keeping an eye on that area. Now, from here, let's go ahead and take a look at those magnificent 7 stocks. And again, I'm using that 2-month view. And what I wanted to share with you, for those of you that follow this show regularly, welcome back. Happy to have you here. And I did want to remind you that when looking at these areas, it's always quite helpful to use this RSI so you can see where that strength is. And we are seeing a shift of sorts where areas that were up there at that forefront are now in this lower quartile and vice versa. Certainly Meta would be one of the bigger names that would qualify. But we are seeing Nvidia moving back up to the forefront, and be remiss to not share this chart with you because it is acting very constructively in the sense that we are back above this key 50-day simple moving average. We had above average volume on those rally days this week, and we have that RSI back up in positive territory. Now, this MACD on the lookout, of course, would like to see that black line up through the red. However, it is not such a leading indicator as the RSI. So really looking quite compelling with Nvidia. Let's go ahead back and take a look at Tesla, which had a very strong week, up 13.5%. However, this downtrend is not yet reversed. You can see we had that RSI in positive territory, bit of a head fake. We've had that take shape here in the past numerous times with Tesla, not a name that I would certainly be attracted to at this point in time. And next week, we have two major names reporting. Here we are with Amazon. Now, I talked last week about that capitulation bottom, what it looks like in the broader markets, and it can be used also for individual stocks. And we did see that in Amazon on Thursday with that gap down, buyers coming in on the dip so that we closed in the upper reaches of its trading range. Now, that is good news. We have not quite seen the follow through yet, although today's 3.4% rally is a very nice start. Those numbers next week are going to, of course, say it all, but that is certainly a good starting point with that potential capitulation bottom on Thursday. Now, from here, I did want to share with you other views here of the S&P 500. And this is, again, all about shortcut ways to see what is moving the markets and why. So this is all of the 500 names in the S&P 500, again, RSI. So these names that we're looking at here are your relative leadership names. And certainly of note very quickly is the fact that each of these names reported their earnings last week, and they all had, certainly up here at the forefront, these gaps up into potential continuation rallies. And I would say two things here that you want to be on the lookout for is when looking at these potential names. Let's take a look at WAB, nice gap up, continuation rally shaping up. You want to make sure that that gap up is not filled. That's one thing. But secondly, very quickly and easily taking a look at potential themes. Are there areas of the market that are seeing vibrancy? And first up here, BSX and RMD are both medical products companies. And then also you want to take a look at retailers. We can see CMG. This is Chipotle, had a gap up into a beautiful base breakout. And you can see this downtrend reversal shaping up. I did want to share with you two other names that are in the same industry group, because this is what you will see oftentimes when a well-known company reports strong earnings. You'll have add-on plays. And this is Wingstop coming out. Look at that nice base breakout with that black line up through the red, looking very compelling. They did not report, but certainly Chipotle's earnings. And that, again, is what happens. You'll see a migration into other names in that same group. This is SHAK, again, did not report, but it did reverse its downtrend. So let's go ahead back to that list of these relative outperformers here in the S&P 500, because very similar to having your arms around what is moving the markets, Merck was another name from our list that had a nice gap up on earnings this past week. But you also want to be well aware of group movement. So we are seeing Dover, BLL, and there was another name up here, but the move into industrial stocks is continuing to shape up. I'm seeing some really nice downtrend reversals take place there. And then very quickly, we're just going to scroll down. Certainly we have a lot of names, but I did want to make sure that you were aware that all is not great within consumer discretionary, Marriott, these are some of those home builders that are not faring well, DHI, PBH. So likewise, getting a quick view of those areas that are not acting quite as well. And that's it for this week. Everyone have a fantastic weekend. If you like what you've seen, go ahead and hit that like button. And I'm going to look for you again here next Friday.